Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here with your Friday morning pre-market webcast. Okay, so we've got the jobs report, the non-farm payrolls at 8:30 a.m. Eastern Time, so not quite an hour and a half, about an hour and 25 minutes away from when I'm taping this. Um, so trading the jobs report, here's how we do it. We don't game jobs. You don't walk into we don't sit down at the desk and we say, okay, we're going to have an upside reaction. We're going to have a downside reaction. That's not the right way to think about it. If you're right, you'll probably do 3 or 4 handles on a trade because it's like putting your hand on a hot stove and getting away with it. I mean, you'll just pull it right back off. Okay. If you're wrong, you'll hold it. You'll wait till you'll wait till your fingers fall off because the trade is about being right. It's not about making money. So if you guess wrong on the jobs report, doing a trade before the number comes out, then you'll hold it and hold it and hold it, wait to be right, and you won't be right, and you'll blow a big hole in your account. Don't do that. The better thing to do, the thing that we do, and the thing that's been incredibly effective for us over the years is you get a number, you get a reaction. There's an upside and a downside to that reaction that establishes a range. Once that range is established, you're either making higher lows or lower highs off of the range, and that can create some opportunities. Or you break out or you break down above or below that range, and that creates other opportunities. That will usually keep you on the correct side of the road. And it may give you really, really nice trades. It may give you okay trades. What it's probably not going to do is get you run over by a truck. So for us, that's the better way to do it. You shouldn't look at trading the jobs report like it's the most exciting thing ever. Okay, it's very dangerous. There's opportunity, but there's opportunity because there's incredible risk, and you've got to respect that risk. All right, let's talk about the charts. So here's the daily chart. I haven't touched this chart in 4 days because there's no reason to touch this chart. We are smack dab in the middle of that trading range. We are engaging the daily middle band now for 6 or 7 sessions running, and we're getting a really nice little compression. It can be frustrating during the day as you're trying to trade this, especially if you're an intraday trader, but the reward on the back end of it is you're going to get expansion. Okay, so you just have to suffer through the compression to get to the expansion. And like I said yesterday, I don't expect to see historical compression like we had during the summer. I don't expect that at all. That's like waiting for the 100-year storm to hit twice in a month. It's not going to happen. So what happened yesterday? Yesterday was an interesting day. They took it down to basically the area of the daily mid-band, and then they blasted it off on some QE news out of the ECB. After they did that, though, everybody lost interest, either because they were spooked or they're waiting for jobs or whatever the reason. It doesn't matter. Price did nothing for the following 5 hours, where it effectively traded between 56, 56.75 and 50, 51. So once it made that hop up into the weekly pivot area, this hop right here, it didn't go anywhere. Didn't go anywhere at all. What we've seen in the overnight is we've seen a move back to the monthly pivot. You've got matching lows at 48. So when we do get a jobs reaction, I'm going to be very interested to see what 48 wants to do. If the bears are going to control jobs, if they're going to knock it down, they need to take out yesterday's low. Then they need to go deal with the weekly low. You can see that there on Tuesday, where the support zone was tested, where we made matching lows at 21.36. On the upside, the bears have got to take care of Tuesday's high at 59.75, and then go to work on the top of the trading range at 68. I'll be very interested to see if either side can get a sustainable move once we get into the regular part of the day. Simply because we've seen so little in the way of we've seen moves this week, but every move has been retraced back to the middle, and that's okay to trade. Yesterday is not okay to trade because two handle ranges you can't really do anything with. Two handle ranges you need to go play golf or go take a nap or just get away from it because you'll overtrade it and you'll get yourself, you'll sit around with a bunch of paper cuts. Um, what hasn't happened this week is getting the initial move and then getting the follow through move from either side. Bears didn't do it here. They got the move, but they needed to break the zone. Didn't get it done. They take it up here, then you end up making a lower high. You don't get the next move. Ramp it, you don't get the next move. So it's that second move that neither side's been able to produce. So I'll be interested to see after making an unknown known with respect to the jobs report, if that's going to allow one side or the other to take that second step. If they do, then there'll be plenty of opportunity for handles. All right. Everybody have a fantastic day. Follow us over at Twitter at Princeton Trader. Come check out the website, princetontrader.com. Come check out the chat room. Have a fantastic day. Have a fantastic weekend. I'll be back Monday morning with another webcast. Trade them well, everybody.